Hey guys, it's Sasha. Since Donald Trump came back to the White House on January 21st, the US economy has begun imploding. The US dollar has fallen 10% against the euro, 10% against Japanese yen, and 9% against the pound. US Treasury yields are spiking at the same time as the stock market is falling, which is extremely concerning and unusual. Mortgage rates are at 7% despite the Fed reducing interest rates. And now, thousands of small businesses in the United States are beginning to get completely wiped out, annihilated by the tariffs. And the most perplexing thing about this economic implosion is that it was completely self-inflicted. Before January, the US economy was actually doing just fine. I know it's an unpopular thing to say maybe, but things were actually pretty good on average in the US compared to other countries. Since the financial crash, the US economy has far outpaced every other major economy around the world in terms of growth. And the big problem that the United States is trying to solve is public debt. And we've all seen that famous clock on Wall Street which shows how astronomically huge the public debt burden of the United States is and how fast it's climbing. There is this popular website which shows the same number along with a whole bunch of other stats. The obvious aim here is to overwhelm anyone looking at the numbers and induce a sense of panic and anxiety. But the truth is actually not all that bad. Here is a chart of the US public debt relative to US GDP, and you can see that after the unwind of the financial crash, the ratio of debt to GDP in the US has actually been flat for the last 15 years or so, except for the one-off spike that happened because of the pandemic. And you could argue that something needs to be done about this giant debt pile so that it, comes down. And it should come down. That is the correct approach because the interest on that debt is eating a giant chunk of US taxpayers' money, and it's a substantial part of the overall budget deficit. But the reason why the ratio of debt to GDP in the US has been flat is precisely because the US economy has been performing so well. The rate at which the economy has been growing has been so fast that even a $2 trillion budget deficit every single year has not meaningfully impacted the level of US debt relative to the size of the US economy. And if spending by the US government can be moderately curtailed over time while the economy continues doing its thing, that ratio of debt to GDP could start moving meaningfully down. The total size of the US public debt is over $36 trillion, which is about 5.5 times the US federal budget. And this means that there is no way in reality to make meaningful cuts to that debt by making small adjustments within the federal budget. If the United States government was a person, let's say that person earns, $50,000 a year. And while earning that $50,000 a year, they spend $64,000 a year and they borrow the difference, the $14,000 on credit cards. The total amount that is already sitting on those credit cards is $280,000. And it is a really big deal. It's a big number, right? You need to work out how to stop adding to that pile of debt. Suddenly, these numbers make a whole lot of sense when you put them in person perspective, right? But at a recent meeting in the White House, Elon Musk said proudly that Doge is now aiming to hopefully find $150 billion in annual savings.
Well, thanks to your fantastic leadership, this amazing cabinet, and the very talented Doge team, I'm excited to announce that we anticipate savings in FY26 from reduction of waste and fraud by $150 billion.
This whole Doge initiative was meant to wipe out the deficit or at least make a meaningful cut in it. In reality, it's not doing much at all. If you put that number in perspective, it's a bit like that person who makes $50,000 a year finding a way to save $90 a month. It's not going to make any actual difference. It's like canceling one subscription. What would make a huge difference though is if the person earning the $50,000 a year finds a way of how they could maybe get to start earning $100,000 a year in a few years' time. What is the path to that? This is the equivalent of GDP growth for the country because as the economy grows organically, so do the government tax receipts. But at the moment, we are seeing the exact opposite happen so far this year. The way that the tariffs were imposed by Donald Trump has alienated the United States, has created a country that is at odds with the rest of the world, and made enemies out of long-term allies and business partners. It is an isolationist policy. The White House has provided a large number of reasons why the tariffs were implemented. Many of those reasons do directly conflict each other. First, the tariffs are non-negotiable. Then the purpose of the tariffs is to negotiate and get trade deals. First, the tariffs will bring back manufacturing jobs to the United States, but then it's a quick pivot to saying that automation and AI and robots and the future blah blah whatever will be doing all of the work, which means no manufacturing jobs will actually be created, which kind of defeats the point. First, the tariffs are meant to encourage businesses to move production to the United States. Then it's actually trying to get other countries to buy more US products a few days later. And then it finally transpires that the tariffs are actually trying to get other countries to cancel their own tariffs, even if those other countries never had tariffs on the US in the first place. And here's the thing, tariffs in their own right are not a bad thing. There are many good reasons why countries do have tariffs. Many countries do have tariffs. They're often called duties. Countries wanting to protect their countryside, for example, domestic food production, domestic farms, often introduce tariffs on food products. Countries wanting to stop important local industries from going out of business will put tariffs on importing competing products, because to them that domestic industry is important. There are reasons, right? But the method of implementation, the timelines, the messaging around it, all of that is also very important. Slapping huge tariffs overnight on everything and then changing them like once a day every day is not in any way helpful for business. It doesn't help anyone understand what the actual fuck is going on, what they should be doing, what they should not be doing. Should they be building a factory? Should they not be building a factory? Should they be selling more stuff to China? Nobody knows. Calling your trading partners names on social media by the president and the vice president is also not helpful for business. I know, weird, right? And if Trump was serious about bringing back industry via tariffs, he could have done that without destroying the US economy in the process. It is possible to do tariffs without it coming across as if a child drew up the policy in the first place. He could have gone and announced targeted tariffs on specific industries that the US actively wants to bring back. You know, maybe it's cars, because cars are the future, the self-driving, etc. Maybe it's high-tech manufacturing of things like graphics cards used for AI, etc. But you probably do not want to repatriate sweatshops that make cheap t-shirts and sandals. I don't know. I presume not many Americans want to work in one of those. And if you did want to encourage businesses that you do specifically want to come back, you could go and first think it through before announcing a half-baked policy made up of made-up numbers. Go and maybe announce a 20 or 25%, whatever you want, tariff on cars being imported from abroad, but start it in 3 years' time. Maybe even started with a lower 5 or 10% tariff kicking in at the 2-year mark, so that companies are encouraged to move production to the United States. Make one announcement, make it extremely clear, give people all the time in the world to make it happen, make the policy extremely clear so that the companies have enough time to go and build the factories and set things up. Then maybe go and add a further tariff. If we're talking about cars, like on car parts and all the raw materials that go into the manufacturing process, and maybe make that second tariff start in 5 years' time, 2 years after the assembly plants, 2 years after the 3 years on the factories, so that then the companies have even more time to sort out the supply chains that feed those factories. Companies that choose to move production to the US would have enough time to make the switch, put their money where their mouth is, and a lot of companies probably would, because it would make commercial sense to do so. Companies that do not choose to do it will have to pay the tariffs and therefore lose market share. And I'm not sure if this is actually a good strategy. I'm not advocating that this is what should happen. I'm not sure manufacturing is where the big bucks will be made in the next 20 to 40 years. I think I'd focus on the good stuff happening in Silicon Valley, robotics, AI applications, things like that. But if you really do want, as a matter of policy, to go and do tariffs, there are ways that you could go and do it that could have a chance of working. It's not just this is the only way to do tariffs, and if you say anything against it, then you are some kind of naysayer. As it stands, according to Donald Trump, there are over 70 countries wanting to strike a deal with the US. Whether the 70 countries includes the penguins from the Heard of McDonald Islands, we do not unfortunately know. But if the penguins do come to the White House to negotiate, they only need to remember to say thank you, because they have the unfair advantage of always wearing a tux. Japan was one of the first countries invited to the table for discussions, but according to the delegation from Japan who spoke to the US last week, they couldn't get an actual answer from the US as to what it is that the US actually wants. It's a weird form of a racket where the racketeer is not sure what they are demanding. The new tariffs break the previous trade agreement between Japan and the United States, which was negotiated and signed back in 2019 by the then previous president, Donald Trump. In a joint statement that appeared to refer to the impasse over automobiles, the United States and Japan vowed on Wednesday, in 2019 that is, to refrain from taking measures against the spirit of these agreements and make efforts for an early solution to other tariff-related issues. Japan's Prime Minister Shinzo Abe said, "Between President Trump and myself, that has been firmly confirmed that no further tariffs will be imposed." This was just 6 years ago. The United States-Mexico-Canada agreement came in July 2020. That's just 5 years ago. And that agreement was also negotiated by the then previous president, Donald Trump. And today it means nothing because the United States has decided to unilaterally tear up those agreements that the current president himself negotiated and agreed to. So why would any country go and grovel, make any sort of compromises, like give in to demands and bow down to kiss the ring, when they know that the agreements that they sign with the United States don't actually mean anything? They're not worth the paper they're written on. The very guy who negotiated the previous deals with the same countries is now saying that the previous deal was unfair and amounts to, quote, raping and pillaging the US economy. China has just come out and said that the US tariff policy amounts to extortion. And the problem with giving in to somebody trying to extort you is that they will come back and do it again. And you know what? They are correct. Donald Trump says that countries wanting to negotiate should come to the White House. But just 2 months ago, President Zelensky came to the White House to do some kind of deal and was publicly humiliated by rude and childish remarks from both people like JD Vance and media allowed in the room. Now China is sitting back and watching what happens. Donald Trump has said that Chinese President Xi Jinping should call him, but China has chosen to ignore the request because, unfortunately, in this situation, China actually holds the cards. About 15% of China's exports go to the United States, which is pretty substantial, but China manufactures not just for the US, they manufacture for the entire world. That is their unique advantage. Only 20% of China's GDP actually comes from exports. So in the worst case scenario, China will lose 15% of the 20%, so about 3% of their GDP if all US exports are cancelled overnight. Their GDP growth is higher than that, so they'd still have positive economic growth even in this scenario. And this is assuming that those exports cannot be sold in other markets around the world, which they probably would be. But for the US, some of the biggest companies like Apple manufacture a big proportion of their iPhones in China. A huge amount of electronics, computers, phones, peripherals, car parts, you name it, are all manufactured in China. A lot of clothes, tools, toys, and a lot of factory machinery that is needed to set up your factories is also manufactured in China. If those imports stop, as they are currently because of the tariffs, for many of these products, there is no alternative or very, very limited alternatives available within the United States. In some cases, there is no viable or any reasonable alternative anywhere in the world. There have already been dozens of cancellations of freight ships going from China to the US because of the tariffs. This is a big deal. These are huge ships that transport a huge amount of cargo. It takes about a month for the goods to make their way across the Pacific from China to Los Angeles, and then some more time after arrival before those goods are sold in the US. So while we can see the data already, the full impact of the tariffs will only start being felt when existing stock of goods begins running out, which will take some time. If this tariff war endures, there is only going to be one major loser, and that loser is not going to be China. And to top it all off, in the last week, Donald Trump has been making public statements that he is trying to figure out how to fire Jerome Powell, the chairman of the Federal Reserve, because Jerome Powell is refusing, at the behest of Donald Trump, to lower interest rates as he's anticipating potential issues with inflation on the back of tariffs. Of course, Jerome Powell was also appointed by the previous then President Donald Trump, and the Fed is meant to be an independent body in the United States, which sets monetary policy, which is separate and intentionally so to the fiscal policy of the US government. And if the White House essentially goes and takes over the Federal Reserve by kicking out Jerome Powell and the rest of the FOMC and replacing them with White House puppets via whatever illegal means that they prefer, the entire world is going to be looking at the United States and wondering what the actual fuck is going on in there. The IMF just slashed US GDP growth forecast for this year from 2.7 to 1.8%. Pretty substantial. And even that might be very generous given that the Atlanta Fed GDP now is projecting that Q1 in the US will see a contraction of the economy by 2.2%. And the tariffs were announced on April 2nd, which is 2 days after the end of Q1. So the impact has not yet been felt in any way. If I had to guess, these tariffs will have to be cancelled, eventually roll back some way after Donald Trump works out how he can position undoing the tariffs as some kind of a win. Because if the tariffs do not get rolled back, the rest of this year is going to be dire for the US economy.